Just in case you didn't know, RRSP season became RRSP season because the government gave us Canadians the first 60 days in the year to contribute to our RRSPs so that we can claim it for the previous year. And what historically used to happen was, while I was in the bank, people would rush in during the last month, sometimes the last day of February, just wanting to contribute to an RRSP and then getting that tax receipt, and then you wouldn't see them again for a year. The biggest thing, or biggest mistake, if you are one of those people who left it till last minute to make a contribution to your RRSP, you're running into the banks trying to get that tax receipt so that you can do your income taxes and get that tax deduction. One thing you're going to notice is that your banker sometimes doesn't call you or doesn't tell you what kind of investments you should be putting it into. You just think and hope for the best that your RRSPs are taken care of and that your registered retirement savings plan is put in a good place. What most people do is they just set it and forget it, and it's up to your financial advisor or your bank to call you and make sure that you're properly invested so that it actually meets your retirement goals, which is the ultimate goal, right? And so don't just take that tax receipt and run. Make sure that you are invested properly. And when I say invested properly, make sure that your investments are going to meet your retirement goals. Now, you're probably thinking, well, my goal is just to retire comfortably. How do I know if I'm going to be comfortable? So that's the next step, of course. When you meet with your financial advisor, your financial agent, make sure you ask that question. How much money do I have to invest so that I can meet these goals that I have, these aspiring dreams that I have in retirement? One of the things that I think a lot of the people in the financial industry, the traditional financial industry, neglect is putting you into a plan that's going to meet your dreams. And it's unfortunate that they leave that up to you to ask that question, but even if you did ask that question, a lot of banks will make sure that they compartmentalize you into a certain group where if you don't earn a certain amount of money, if you don't have the investable assets, you may not be getting the best advice. And that's the unfortunate thing, is you may not be getting the same advice as maybe someone who is very well off. And to me, that's a little bit unfair. So I wanted to remind you that you should be contributing to your RRSPs on a regular basis to make sure you take advantage of dollar cost averaging. And if you don't know what that is, you need to reach out to me so that you don't have to run into the bank and try to get a tax receipt at the very last minute. You're doing it on a monthly basis, and it's almost like a forced savings, and you don't have to worry about it. But the most important thing is making sure that it's invested properly, making sure that the investments you've chosen with your financial agent is going to meet those goals that you have. I think everybody, whether you have a lot of money, a little money, or you're just too rich for your own good, I think everybody needs to know what that number is, because I know for me it would be peace of mind to know, hey, I'm going to make it till I'm 85 and I'm going to run out of money. What would you change right now so that you can live for as long as you need to live and not worry about money? That's the kind of thing you should be wondering right now, because today is the only day you can affect tomorrow. I got you.